Welcome to the Rat Race to Fi podcast, where we discuss money, mindset, real estate investing, and ways to achieve financial independence. Whether you are a rookie or a veteran needing new ideas for investing or creating side hustles, you're in the right place. Here to challenge you to think out of the box, your hosts, Felipe Mejia and Diego Corzo.
Yo, Diego, what's up? So we have a really cool guest today. His name is JD. He's the finance cowboy on Instagram. And I really like this guy because when I found him, he was still like fresh. He only had like 1,000 followers. I think he's built it up to like 5,000 now. But it's really interesting because he talks about finance, building wealth, living in a small town, hunting, like the whole thing. It's hilarious. He's a great guy and it's a great podcast. Make sure you listen to the end.
Yeah, Felipe, one of my favorite things is that he also, so he's in his, I believe that he's only 30 years old.
Yeah, he's young.
And he's built a portfolio of 22 doors, and he only started investing when he was 25. Mm-hmm. So in 5 years, he's been able to build this whole portfolio. And on the show, he talks about how he did it, how he scaled, how he partnered, and how he's investing. So I'm really excited to hear his story. And I also asked him at the end too, is like, from your success, like what does your family think or your friends? And he goes into depth on that. So I'm very excited to see what the audience is going to think.
Yeah, he goes into great detail. But before we get to JD, really quick, guys, we got a huge announcement. The Rat Race to Fi course is finally live. Go to our website, www.ratracetofi.com. You will find the course there. And if you use the code RR half off for the next couple months, I think to the end of the year, it's 50% off. So make sure you go on there and find that course. All right, so anymore, let's get to JD. JD, what's up, my man? So I want to introduce you to Diego, JD. He's an awesome friend of mine, business partner. Diego, I want to introduce JD. I found him on Instagram. He's the finance cowboy on there for you guys that don't follow him. So you guys are about to be able to chop it up on here. JD, how's the weather over there, man?
Dude, it's nice. It was in the 50s this morning. I went deer hunting, and it's going to warm up today, probably be in the 70s. So, may find some golf. You may find some golf later in the day. Just living it up. So.
Wait, so you went hunting this morning and then you stopped hunting to get on this podcast? I feel really honored.
I came out of the tree stand to talk to you guys. So you're special. You should feel special.
So for all the listeners, make sure you listen all the way through to the end because JD legit got out of a tree to come talk to us. JD, before the podcast started though, I did talk and asked you a little bit about this TikTok video that I've been watching recently, or videos that pop up. You know how like your For You page pops up like random stuff? So there was this like lady who was like, how to upset your husband during hunting season. And she was like taking his clothes and washing it. Like, what's so wrong with that? I don't get it. I was like, wait, she's washing his clothes.
Yeah, that's a big no-no in the hunting world. And most hunting wives know not to do that. But if you wash clothes in Tide or any clothes cleaner that has scent to it, you're done in the woods. You might as well chalk it up as a loss.
Just go home.
Yeah, just go home. We try to keep it natural. You don't want to smell like anything. You want to spray down your clothes with scent blocker. And the last thing you want is your wife putting any camouflage from any time in the fall and winter. Just leave camouflage out of the washer and dryer and everybody will be happy.
That's hilarious. I could see you like rolling in the leaves outside to make sure you smell like the outside. Like, I feel like that's what it would be. A lot of people know that I'm from the South. Like, I'm from Nashville, but I'm like city Nashville, like not real Southern type, like Southern, but not like out in the woods and stuff like that. It's interesting though, because when I went to college in Cookeville, Tennessee, and that was really Southern. And it was interesting because like growing up in Nashville, JD, like I thought I knew a lot of Southern folk, but that's not the truth. Because when I went to Cookeville, oh my gosh, those are Southern people, like for real. I hope the word redneck doesn't offend anybody, or you can just take it out of the podcast. But like those were for real. And you know what really blew my mind, JD? I know I'm going on a rant here, and we'll get started with real estate in a minute. But what really surprised me was like, I think I told you this, like the real Southern people that I finally got to meet, bro, they are some of the nicest, most laid back, chill people I had ever met. Like the real country folk. Would you agree?
Oh yeah, for sure. For sure, man. It's a great culture. A lot of times we get slammed because we talk slow, we sound dumb, and then like anybody, there are some idiots in the mix of us. But for the most part, it's a good group of people. They're fun loving, and I love it. I was born and raised here. I've traveled all over, but I really do love the Southeast. And to your point, Cookeville, if you guys don't know where Cookeville is, type it in on the maps. It's in the middle of nowhere.
That's hilarious. So where are you from, JD?
So I am from Anderson, South Carolina. It is in the upstate of South Carolina. The easiest way to put it is in between Atlanta and Charlotte.
Got it. Okay. So JD, let's get started, man. Real quick, give us a 30,000 foot view of where you're at right now, portfolio wise. And then we're going to jump into like JD in high school times.
Nice. Yeah. So right now I have 22 doors. 2 of those are short-term rental Airbnbs on the coast in Charleston, South Carolina. I have 7 trailers, so like a mini trailer park, and then the rest are single family homes. And they're all in my general area in the upstate South Carolina, except for the 2 short-term rentals that are by the coast, and they're about 3.5 hours away.
Oh, nice. I want to dig into all that, the mobile homes, the single families, and the STRs. But before we get started though, on that, JD, tell us a little background. Who are you? Where'd you grow up? I mean, take this time to kind of let the listeners know who you are.
Yeah. So like I said, I'm from Anderson, South Carolina. I'm a pastor's son. So my dad, we moved here and he planted a church here when I was really young. He's still the pastor of that church. So it's a large church. So I grew up, had to be perfect, even though I definitely wasn't. Somebody's got to be the black sheep, right?
Oh yeah.
So that was how I was raised, very conservative Christian home. You kind of mentioned it. He's probably a jock. You're right. I wasn't on the chess club. I did play in the band. I was in the band too, because I play the drums still to this day in church. I can play guitar and sing. But baseball was pretty much my life. And every day before school, I'd work out and hit balls in the cage. I'd go to school. This is in high school. And then after school, I'd go back to the cage and I'd hit till they closed down at 8. And I'd redo it every day. And so my goal was to play Division I baseball, and I achieved that. I played at a small Division I in Charleston, South Carolina, called Charleston Southern, Big South Conference. So like schools like Liberty, Coastal Carolina, folks have heard of them. So that that was pretty much my childhood. Great home life. No money. We never had money. Nobody taught me about money. Nobody taught me about real estate. Nobody taught me.
Wait, you're telling me that a pastor's kid wasn't rich? You guys didn't?
Yeah,
make a whole bunch of.
Exactly. We weren't
right?
we weren't one of these mega churches, so no big money here. That's for dang sure.
So okay, so you in high school you were a jock. You hit the notes and you play guitar in church. That's pretty dope. What about college? What did that go like for you? Did you completely rebel and jump off the deep end and then come back? What was college like for you?
Yeah, I mean, as far as that goes, definitely had a good time in college. It was a very enjoyable 4 years. Social life, baseball. I enjoyed school. I enjoyed networking. And then most of all, I met my wife. So she ran track at Charleston Southern while I was playing baseball. We met her freshman year, my sophomore, ended up dating the next year.
She was running from you, bro. She wasn't a track star. She was running.
She still is.
That's what it was.
I'm still chasing her down.
Let's go. I love that. So she did track. So what did you study in college? What did you want to do? Were you always into real estate? Was that your goal? Was you like, oh, I'm going to get rich off real estate because I can't play ball, or what? I mean, what happened?
No. So I obviously went to school literally just to play ball. I mean, I had to get a degree. I chose communications because I was told that it was easy. And so I was like, let's just do an easy degree. And sure enough, it was easy. And so I got to focus a lot of my time on baseball. And, that was my focus. And you kind of reach this point where you realize, okay, I don't have a future, past this. And you're like, what am I going to do? And for me, I invest in real estate and I love it. And I do a lot of real estate deals, but still to this day, my main job is sales. And I've always loved interacting with people, love talking with people, building relationships, help solve their problems. And I knew I wanted to get into sales after college. I didn't have a specialized skill. I'm going to be a doctor, a lawyer, things of that nature, but I knew I could hold conversations. And I was pretty good at persuading my friends to do stupid things all throughout life. So I knew, I was like, you know what, I need to go give this thing a shot. And so I kind of did my research, and obviously I knew medical sales was kind of the mecca. That's where you wanted to get, but it's hard to get there right away. So I was like, how can I build this foundation to be a stepping stone to get to where I want to go? And when you come out of college, there's some companies you learn if you want to get into sales that are kind of the best at sales training. And you got the Centoses, the Xeroxes, the Enterprise Rent-A-Car. And so I went with Centos. And that's where I started my career, to kind of get that sales base. And then I progressed, went to pharmaceutical sales, went to medical device sales. And throughout that journey, and we can dig into that, but throughout that journey, I learned a passion for real estate, through my best friend and through my father-in-law. And here I am today with 22 doors and always looking for more.
Interesting. So you went to college for communications, you got into sales. How old were you? Because I know you're 30 years old, right?
Mm-hmm.
How old were you when you caught the bug to invest in real estate? Because a lot of people might feel, okay, you bought 22 doors in your 20s. That is super impressive.
Yeah. So I would say I caught the bug at 24. I really got the itch, but I did not have my finances in check. And so I was like, I decided what I wanted. Now I had to put a plan together to achieve that. And that started with budgeting, eliminating stupid debt, starting to save up for down payments. And then by 25.
Sorry to cut you off, JD, but I want the listeners to know, where did you pick up a book? Did somebody tell you, the bug that bit you? For example, for me, it was a book, and I knew I was never going to be rich playing sports, singing, or anything like that. So I was like, I'm a 5'8" Hispanic guy in the South. I got to get rich off somehow. That was real estate. I just Googled it. What was it for you? Yeah, basketball. What was it for you?
So for me, it's a couple things. Number one, my best friend, he got into real estate right out of college. And so I was living in Florida at the time. He was in South Carolina, and he is just starting, and he had this passion for it. He would just be like, he would just tell me, man, there's opportunity to build a lot of wealth here. He said, it's so much fun. It's like you buy these properties and these tenants, you only have to put a little bit down, and then other people pay this house off for you. It appreciates in value. You get a little bit of cash flow. And the next thing you know, you're wealthy. And I'm like, man, this sounds awesome.
Wait, was this one of those friends that you convinced to do something stupid? And now
trying to get you he back? Was my best friend. Okay, he was so the straight-laced guy.
He was really trying to get you back.
Yeah, that's probably exactly what he was doing, because I made him do a lot of stupid stuff. But we had a great childhood because of it. So he was the number one influence. Obviously, I read a lot, even articles, books, whatever I can get my hands on. I think maybe not, but a lot of people have heard of Rich Dad, Poor Dad. You read Robert Kiyosaki's, and just kind of, it's not really a real estate investing book, but it kind of lays out those principles, and you realize, okay, I can leverage other people's money to build this fortune. What's the best way to do that? And through my network, talking to my best friend, and then my father-in-law, so my wife's dad, he has done very well in real estate over the years, and he always loved it. He's got a bunch of properties. He was a big land guy more than rentals. He's got a couple rentals down in the Keys, but he would buy properties because he just enjoyed them. But I've just seen over time how he's been able to sell them, or what they're worth now, what he bought them for in the 80s, compared to the price now. And you kind of learn, wow, I need to hop in on this. And so between my best friend, my father-in-law, and, just digging into resources and books, I came to the conclusion there's really no better way to build wealth than through real estate.
Yeah, I agree 100%. Like I said, the bug that I caught was I researched how to get rich, and a bunch of stuff came up, and real estate was a thing that kept coming up that didn't require a lot of talent. And I was like, I'm in there. That's what I'm going to do. I can't mess that up.
Exactly. JD, similar to me, or similar to you, my best friend in college was the one who threw me a book, and that was Rich Dad Poor Dad. And he's like, dude, you have to read this book. It's amazing. And reading, just like you said, that book it's not a real estate book, but it teaches you two things, right? That people either trade their time for money, or they can make their money work for you. And just like you said, real estate for me at that time, I realized that was going to be my avenue to build wealth. And I set a goal to own 10 doors by age 35. I was 21 when I read that book. And yeah, for sure. So you you caught the bug when you were 24. And then how long did it take you to buy your first property?
I bought my first property. I believe I was 25 years old. I had just moved back to South Carolina. I'd been in Florida for 3.5 years, selling pharmaceuticals, and I just moved back to South Carolina. And I was close to my good buddy, and he's like, "It's time, dude." Because if you guys can think back, maybe you weren't like this, that plunge for that first property is hard. At least it was for me. I mean, I don't know if y'all want to speak to it.
Yeah, it was really hard. Absolutely. I remember sitting there like stressing in my room. I was like, man, I just make the right decision. Nothing's happening. I I expected to be at the closing table, sign off, and like balloons and stars and fireworks. And it was like, all right, you signed. Thanks. Have a great day. Here's your keys. You're good to go. And I was like, wait, that's it? Like, wait, what happens now? I didn't have insurance on the property. Like, it was just a bunch of really dumb stuff. Yeah, it was bad. But no, I remember mine as well. So then what happened, JD?
Yeah, no, I mean, it's definitely scary. I just remember, thinking, is anybody going to rent this? Are they going to pay their rent? If they don't pay their rent, can I cover it? It was terrifying. But I will tell you guys, everybody who's listening, I promise this is the one time where the grass is greener once you take that plunge. It's not as frightful. It's not as scary when you get to the other side. People need a place to live, and you got to look at it as you're helping people out. Like, you're buying a property to give them a good spot to live, and people are going to take advantage of that. So if you're on the fence and you're scared to take the jump, I want to encourage you to do it today, because it's the best decision you'll ever make, and you'll get more comfortable with it, more confident with it as you go along. And you'll look back and say, man, why didn't I start? Why didn't I start earlier? So, once I bought that first one, it was over at that point. I was like, okay, I know how this works now, to a degree. I was, dangerous enough to get some deals done. And so I just started looking for deals nonstop. So I picked my area, which was in Anderson, South Carolina. I mean, you could have gone anywhere, but it was close to me. And, being a beginner, I kind of wanted to see the properties, get my hands on them. And so I learned the market. The way I did that, I think Felipe, you put a story up today, or a couple stories talking about how you find properties. And, I was on a coaching call with a lady yesterday, and she's asking me, and I'm like, people think it's this big, complex, like, equation to learn markets and find properties. And it's really simple. You just hop on, see what other things are sold for, what are the comps in the area. And then you go, either cold call or find one that's listed in that same area, make an offer, based on the value, and then, get it under contract and close it. And so I just started doing that. I narrowed down into where I wanted to buy, and I didn't choose the worst areas of town. This was my strategy. Didn't choose the worst areas of town. Didn't choose the best areas of town. It was kind of that middle area where I knew, there were still going to be a lot of people who would want to rent there, but I also still had a chance for appreciation as well. And so we accumulated over time. I started with a lot of long-term rentals. That's, pretty much all I did for the first, say, 3 years, before eventually we bought a couple trailers and got into short-term rental.
And in the beginning, for example, for that first deal, did you buy it putting 20% down? How did you finance that property?
Yep, I did just the conventional investor way, but it's 20% down on a commercial note. I believe it was paid on a 20-year amortized schedule with a 5-year balloon, which did make me uncomfortable. Being my first property, I was like, man, that's kind of scary. And for those who don't understand what that is, it's essentially you're going to pay that loan as though it's due in 20 years, but in 5 years, you either need to refinance that property. If you don't, then the bank expects to have that full loan back. And so that was how I did the first couple properties, actually. Most of them were 20% down. And I think my fourth property, I won't get into in the weeds here, but I have a lender who would lend off the appraised value. And so anytime I found undervalued homes, I would not have to put any money down, or I'd have to put just a couple $1,000 down, or I'd get cash back at closing. I think I did that for 2 homes. And so, for example, if a home that I found and got under contract for $80,000 appraised at $100,000, so I found a undervalued home, that lender would lend me at the $100,000 appraised value. So now my 20% mandated down payment was covered in his lending. So when you do that, it eats into cash flow. There's things you got to take into consideration, but it was helpful for me at the time.
Mm-hmm. Yeah.
I always think there's right strategies for every piece of real estate. And it's like you said, some are great for buying, a piece of property with no money or low money down, because you're in a situation where you might not have money to invest, but you still want to get started. It's funny you say that about the loan. One of my first deals was like that as well. And I had no idea what the lady was talking about. She was like 5 years this, balloon that, 20 years that. And I was like, yeah, I'll do it. all day long. No idea what she was talking about. And it's still one of my best producing properties. Now, I'm not telling him to go out and do that and not understand the way a loan structure works. But what I am saying is go take action, because that property to this day makes me $2,000+ in cash flow monthly. I've got all my money out of that, which we can go into later if you want, but we're here to talk about JD, not me. But that property is still doing $2,000 in cash flow a month. Plus we've refinanced it, got out of that 5-year into a traditional 30-year mortgage. And it's like one of my highest producing ones. Obviously I did my whole build out thing that if you follow me on Instagram, you know what I'm talking about, but it's just been a great rental property. And JD, I'm sure that one that you got came out to be a great asset for you as well. Do you still have it?
Oh yeah, I still have it. I was talking to my buddy who got me into real estate before I got on here with you guys. And I'm actually looking at selling it because I think me and you talked about this the other day, Felipe. I got a lot of equity in these homes now. And so now I'm trying to, play that return on equity game. So, but yeah, as of right now, I have it. It's been a fantastic property. And I'll tell you this, there's a lot of lenders who have a lot of different programs out there. You can find better structures than the, 5-year balloon. But if for some reason that's all you can get your hands on, like Felipe saying, just take the jump. You're going to be okay. Lenders want to lend. They're not trying to call your loans, especially on rental properties, because they're pretty stable investments for the banks. And so don't let that deter you. You can get out of it.
Yeah, I agree. The loan structure obviously wasn't the best, but what it did do, JD, was it gave me 5 years to figure it out, right? It wasn't a situation where like, I got to figure this out right now or I'm going to lose this deal, right? I had to get the loan. So I was like, yeah, no, I want the loan. I want the property. I'll figure it out on the back end. And it gave me 5 more years to completely figure it out. And I always tell people real estate's forgiving, right? If you messed it up the first year or something, right? Just the loan pay down plus the appreciation on the property is going to like build your net worth this way. Loan paying down, equity going up. So I tell people like, look, just take action, make it a positive investment. As long as it's cash flowing, then you're going to be fine. So what happened next, JD? You got this first property. How'd you get into mobile homes and STRs? Kind of give us the rundown.
Yeah, so mobile homes was a partnership with my buddy who got me into real estate in the first place. He came across it, and we've talked about this, Felipe. My strategy was a little different than yours. When I started, I wasn't pushing for cash flow. It was more like an investment vehicle for me. I've switched since then, but I didn't really care at first. If they broke even, I was good with it. I was like, hey, let's just get this money parked. It's going to appreciate over time, debt buy down. But I got to looking, after I had that solid base of these single family homes, I wanted a little more cash flow producing assets. And my buddy brought this to the table, and it's a great deal. We actually did owner financing, bought it privately, didn't use the bank. And it's been a great deal so far. I'd say, when you get into mobile homes, just know, there's going to be a little more maintenance with them. Those little skirts underneath them break all the time and panels fly off. But generally your cash flow is going to be better. And we own both the land and the trailers for that particular. And then as far as short-term rentals, I think I told you we went live the other night. I just love the area. So the island that they're on is called Seabrook Island, and it's south of Charleston, South Carolina. We vacation there, and we were there a few summers ago with my parents, and I was like, this place is gold. Like, it was still a secret somehow, some way, and I knew it was going to gain traction just with social media and how Airbnb was blowing up. And there's $1 million homes all over the island, and there was this little octagon-shaped treehouse looking thing. It's like 950 square foot for sale for $185,000. And so it's like the worst street in the best neighborhood, and I'm less than half a mile from the ocean. And I was like, bro, I told my wife, I was like, I know this isn't one of the nice ones. It's not a 3-2 house, one of the $500,000 $1 million houses. But if we can just get in here, this is going to be a win in the long run. And so that's kind of how we got our feet wet in short-term rental. And I ended up buying the one across the street from it this year. And so I got 2 of them on the same street.
It's amazing. There's a lot to unpack there. Go ahead, Diego. You look excited.
Yeah, a little bit. No, yeah. So you bought those out, like you mentioned earlier, 3 hours away. And what was that process of you being able to look at those properties? Like, did you rehab to make ready and then you furnish them, or what was that process like?
Yeah. So when I looked at the first one, we were actually down there for vacation. And I was sitting there and I looked at my wife, like, we've been there a day. I was like, I got to buy something here. Like, we can't leave here without buying something. And so I saw that house. So I went and looked at it, and it was fully furnished. So I bought it fully furnished. Both of them have been fully furnished. I appreciate that because it's just one less thing I have to do, but I'd say don't let it scare you if it's not. Just go buy furniture. I knew that the first one needed some work. I don't think I understood how much work. I kind of, had a few surprises, which if anybody's done real estate, that happens sometimes. It hasn't been anything major, but we did have to do a little bit of work, update some flooring, redo the outdoor railing, but it wasn't like a total flip. So they both were essentially turnkey with a little bit of makeup and lipstick.
Love. Yeah.
Yep.
Okay. And how much? And right now, so did you finance them putting 20% down, or how did you do that?
No, so I actually got a little savvy. I'm sure you guys have probably done this and bought both of them as a second home. And so the way I did that is I bought the first one as a second home, and then once I had the equity, I actually refied it into a commercial loan. And now it sits as an investment property, which means I don't have another second home. So then when I went to buy the second one, I was like, no, the other one's an investment property. We're going to buy this as a second home, and was able to put 10% down on the second one as well. And so, nice. It was super nice. That's a lot of money to save when you're having to come up with 20%,
Yeah. So just so that the audience knows, when you buy a second home, what are the benefits of that loan compared to an investment loan?
So I'd say the two biggest benefits three is the amount of money you have to put down is less, it's 10%. Your interest rate is going to be lower, and then the majority of the time. And then the loan terms are going to be better. So you're going to be able to do 30-year fixed loans, where if you do a commercial loan, that at least with my lenders, that's hard to come by. And so you're getting those three big benefits that you're not going to get if you were to, buy it in an LLC from a commercial lender.
Yeah. No, that's awesome. That's awesome. Now, do you have a property manager over there, or do you manage it yourself?
Yeah, so I started managing it myself through Airbnb. So I had a cleaning team, who worked as my, eyes and ears, and then I would answer everything on Airbnb, because you can automate a lot of stuff. You really can. You can automate the check-in. You can send them a message while they're there. Hey, how's your stay going? Follow up with them after. But what I learned is it takes a lot of time. If anybody has Airbnbs, you're getting, people are asking questions nonstop, crazy stuff too. I mean, they'll Google, hey, how far is this from downtown Charleston? I'm like, do you not have Google Maps? I don't say that to them, but in my mind, I'm like, why don't you just Google it? Figure it out. I would never ask an Airbnb host some dumb questions. They're like, what's the closest restaurant? Well, look up your restaurant yourself, but a lot of people don't have enough sense to do that. So you're answering questions all day. So I did that for about a year and a half on my first one. I was like, I'm done, because I was about to sell it because I was so frustrated with it. So I actually hired my mom to run it. And so she acts as my property manager now. I don't hear really anything unless it's an expense that goes over. I think we got it set at $500, and I'm like, hey, consult with me. Outside of that, she manages all communication, deals with the cleaning team, and my life is a lot less stressful because of it.
Dude, I love it. It's funny because my mom manages my properties as well here in Antioch. So here in Tennessee, my mom, we have 8, 9 houses that we've converted into duplexes, up downs. And I just got tired of picking up the phone trying to manage other stuff. And I was like, hey mom, what would this cost? And she was like, I want this amount of money or 12 grand for the year. So I wrote her a check, and I was like, don't call me. I don't want to hear anything. Here's my money. So I was like, this is great. So no, I agree. It's funny. My mom does the same thing for me. That's hilarious. We're always going to be mama's boys.
Oh, for sure. And you can trust her. She's not going to do anything shady. And I pay her $500 a month for both properties, which ends up coming out as a pretty good deal for me, because most time you're going to pay 18%, 20% sometimes on these short-term rentals. Sometimes you pay less, but hers ends up being 10, 12. And so I'm like, hey, I'm getting a deal. She's making bank. Chalk it up as a W.
It's good. It's all good. So
exactly.
You got single families, you bought mobile homes, you did some STR. What's it like going forward? What is your plan going forward? What are you doing? Or are you like me, where just if an opportunity comes up, you buy it if it fits in, your wheelhouse of investing? What does it look like for you, Jared?
Yeah, man, I to be honest with you, I don't have an exact answer for that today. I am at this crossroads, and we kind of talked about it not long ago, of what does the future look like as far as my real estate investing goes. Obviously, I'm going to keep investing, but I don't know exactly how that's going to look like today. I have a goal to reach, that financial freedom mark within the next 2 to 3 years, and I'm looking, hey, how can I implement new real estate strategies to make that happen? And so, I would say just off the top of my head, cash flow properties are going to be something that I'm looking more at that I don't want to say I've neglected in the past. I just haven't necessarily cared about because my income's been so good and it still is. I haven't needed the cash flow, but as I move towards that financial freedom, I think cash flow will be a big play. And then also looking at my portfolio at the equity I have in these properties and saying, do I sell them or do I pull the Felipe and take a credit line out on them and, go buy other properties or flip other properties? And I'm in a good position because I have a lot of equity. I bought them, 4 years ago. And as you know, over the last, year and a half, 2 years, it's just exploded. And so I'm sitting in this good spot where I have access to cash. Now it's just figuring out, okay, if I go pull out $500,000, 600,000, whatever, where am I going to allocate that? And so I don't want to make any rash moves. I'm trying to be strategic and say, what are the best next steps for my goals?
Yeah, I'm in a similar situation. I just sold my highest equity, lowest cash flow position property that I can't add any more cash flow to. Like I know that $500 is like the most I'm gonna make, and I'm like, man, this isn't good. Like I have a lot of equity. I need to move that money into 2 or 3 more properties. And I can remember, it's funny what you remember, but I can remember like my mentor telling me one time, don't have debt equity because it's not doing anything, right? Like, yeah, it's great to have a bunch of net worth on paper, but like a crash can happen at any time and like that goes away. And he said, your growth is going to happen in your uncomfortable positions. So I'm comfortable, like you said right now, I have equity, I have cash flow, I have lines of credit, like I'm bankable, I have partners, I have business. So I need to put myself a little bit in an uncomfortable position to grow. So I'm like, let me sell this one property. I have cash now. I need to go invest. Like I need to be uncomfortable because I don't know about you, but as like a real estate investor, when you have a little bit of cash in the bank, you're like, okay, something's not right. I need to be buying something. I need to be investing. So I've put myself in a position where I need to go find more, but at the same time being cautious because I really want to see what happens to the economy. And if I want to keep investing right now or in quarter 1. So I'm in this like weird position. I think I'm in the same position as you. Like, I don't know if I need to go out, be buying, looking for more deals, if I need to focus on what I have right now. It's just kind of like a weird situation right now, honestly, at the end of the year.
Yeah, no, I feel you on that. Yeah, I'm the same way. Like when I have the excess cash in there, it's like I just start like trembling. It's like, what do I do? I don't trust myself. I need to go buy something. And
now you're gonna buy a toy. What would be the next toy you buy, JD, if you didn't buy a real estate?
Oh man, I would probably see. I want to say real estate. I'd say hunting land, but that's real estate. So I'll try to come up with a real toy. I would probably go buy a Jeep. I don't really want one. I'm not a big toy guy. Like I don't care to have stuff. Like I like the experience. I like real estate and I like experiences. Or I like making sales. I like real estate and I like experiences. So I would rather I'm probably going to go to a World Series game here in Atlanta. That's going to be my big splurge. Probably going to be $1,000 for me and $1,000 for my wife. But it's been 22 years since the Braves have made the World Series. I like experiences. I'll allocate some money there. So I don't know. I'm kind of a boring old guy.
That's cool. That's cool. JD, question regarding, okay, so you've gone from age 25 to 30, 22 doors, achieve, you have become now a millionaire in your 20s as you turn 30. How has it been with your other friends or with your family, where you've probably taken a track that maybe other people may have not? Has there been anybody, especially too at the church, like people that may not understand what you've been doing? Because I know that with family, sometimes it's more, are you doing this just because of the money? Are you greedy or this or that?
Dude, that is a great question. So I live in small town, South Carolina. I make a very high income, but I can hide it I could in the past. I can't now. I'll talk about that in a second, because I sell medical equipment, but they give us this big van that we can showcase our equipment. So I drive this big van around, and we had a very modest house. So nobody, like, they just thought, oh, Jaron's just like a little service guy or whatever. Nobody really knew. And as we've progressed, people are like, well, they kind of travel a good bit. They went out to California here, they went out there, and you kind of get some questions. And they're like, oh, he's posting on Facebook. He's got 2 rental properties in Seabrook out. And so people you start getting those, comments. Now I would say for my family, they have been totally supportive. So even though my mom and dad don't have money, like, they've never shamed me. They're like always supporting me. Like, they help me manage my product or properties. They're pushing me to, continue to grow. And so super supportive there. And then my wife's family, her dad's multimillionaire. He's done very well. And so he'll coach me up and tell me I'm doing good. He'll also say, hey, don't get too leveraged. He's a guy who owns everything in cash. So we kind of got two different perspectives there.
Yeah.
But I would say I really caught a little bit of flack. We just moved. I think Felipe's seen a couple videos of my house, and we bought a nice place. It's like 11 acres. The house looks bougie from the outside. It's like 5,600 square foot on the inside. Like, it's wow. Nice. And, since I've done that, I've definitely caught some flack around, even within my company, like people who are making just as much or more than me, and they live in good, nice places too. But they were giving me, I was in Michigan for work last week, and they were giving me crap. And so
here comes the rich boy. Here he comes.
Yeah.
Everybody wipe off your feet.
Exactly. And, when we first moved here, a month ago, I was struggling with it. My wife was too, because we lived in a very modest house when we moved here. That's why part of why we were able to invest so much when we first moved. We bought a $200,000 house. We had no car payments, and we just invested everything. Didn't do anything to the house. That we did stuff ourselves, but then we invested everything. That's how we built our portfolio, and we reached this net worth goal. We're at like 1.2, 1.3, and our family's grown. We got 3 boys. And I was like, you know what? Like, I have income producing assets. I make a very high income. We have sacrificed. It's not like we haven't been irresponsible. We have, 22 rental properties. We got $200,000 in, retirement and liquid assets. It's like, if we want to go buy this house, we can do that now. We have set ourselves up to do that. And so, I kind of felt guilty at first. I didn't like the flack. And now I'm like, you know what? Like, no, I've worked to get here. I'm looking at it as an investment with my family. And if anybody makes comments, I just plainly look at them and say, yeah, man, I've worked hard. It's like, I invested a lot. The last 5 years, we didn't have any toys. Like, when everybody else is on the lake on Saturday and they're, $80,000 boat when they're making $50,000 a year, we weren't doing that. We were investing. We never had any cash. We couldn't go do this. We couldn't go do that. Well, now we can. And, if you ever want to do that, let me know. I can help you out. I'm just kind of spin it like that. Like, I got the keys to success. I know the process. So don't come shaming me, because we sacrificed.
That's really true. I talked to Diego a lot about this. I still live in my first ever real estate purchase. So this house that I'm in right now is 1,800 square feet. It's 3 bedroom, 2 bath. It's very modest. I bought it for $130. We still live in this house. And my wife is like itching for another home. We have real estate homes bigger than the house that we have right now. And it's like you said, I'm very liquid. I have, 34 something, whatever many units it is. I have very boring cash flow producing assets. I have STRs, which I consider high risk, high reward assets. Like, I've invested for the past 6 years. And now it's like, okay, I think we're ready now to buy our home. And it's like you said, I don't want to feel bad when that happens. I drove a 2005 Ford F-150 until like last year. Like, it took me 5 years to like, okay, I'm finally going to buy the truck that I want. And that took a long time. My wife drove a Nissan Sentra forever until we finally bought her Lexus. And what's crazy is those are paid off cash, right? So we were like, okay, those are not cash flow producing assets. Those are depreciating. Let's buy them cash, because they don't make more money to next month. We need to spend it and get it out of the way now. It takes the tax depreciation and move on. So yeah, I completely get what you're saying. I think I'm one step behind you with buying that house. For all the listeners, because we probably do have people that are listening that haven't took that jump, including myself, I don't want to say what allowed you to do it because that's not the right word, but I think you know what I'm asking. Like what was like made it okay? Because me and my wife are right now in that boat where we're like, okay, we want to buy our forever home. And like we're this close, dude. We're like that close.
So I think for me, part of it's my faith. So I'm a Christian, I'm a believer, and I always ask God, like, open and close doors. You know, if I'm supposed to go through something, keep it open. If not, shut it. And I have evidently, like, I've seen evidence of that throughout us, like, pursuing to move from our old home. You know, we had an offer on 30 acres of land that we were going to buy and build on that had been on the market for 4 years because it had covenants and restrictions. Well, I was going to work with an attorney to get them removed. So we make an offer on that land. Now, this property's been on the market 4 years. It's a piece of land. The day we make an offer, guess what? Somebody else makes an offer and it goes under contract. Ugh. And so we just saw time and again where we were kind of pushing the envelope to move and it kept getting shut down. And this opportunity opened. And I'll tell you, take a step back, jump out of the spiritual world into just like standard like thinking procedure. We narrowed down where we wanted to live. Like, so we knew the location, we knew we wanted land, and we knew we wanted a larger house. And so this checked the box for all three. It's a little lower on the land. We wanted a little more land, but we said, okay, this is the exact location we want. And now we have a house to grow into and our kids are young. So it's not like we're having to wait and buy this house when my kids are 15, get 3 years with them in the house, and now they're going, I'm left with this big house. No, I got a 1, 3, and 5-year-old. It meets all of our criteria. They get to grow up in it. We get to enjoy it.
Wait, there it was. That's what was going to push me over the edge. I don't want to wait until my son is 14 to enjoy a house for 4 years. I'm texting my wife right now.
Yep, that's it, dude.
That's it.
That was
that's
it for me.
That's it. That's light bulb moment. Love it. Sorry. Keep going. That was it for me.
That hell, I mean, I just see so many people and they're not financially able. So it's not that they're doing anything wrong. They don't hit, you know, they don't start making money till their mid 40s, and they finally buy that dream house, and then their kids are gone. They're in college, and it's like, oh, we're stuck in this big house. I don't want to clean this anymore. And so they only get a few years in it. And so just to bring it all back, to say all of that, you know, I really had to bring it into perspective and look at it almost as an investment in my family, which was hard for me. But, you know, that sounds bad. That sounds so bad. But like, I'm like you, Felipe, like I just want to keep investing. I don't want any money. I don't want to do anything else but just invest. That's all I care to do. And so to do this, I knew the opportunity cost, because you see the opportunity cost. You're like, dang, you know, and luckily I didn't have to put that much down on this. So my opportunity cost isn't as big as it could be, but you know, your monthly payments higher, this and that. So it's a lot of things you take into consideration, but at some point you just got to say, and my buddy used to help me with this. He's like, man, you're working, you're doing a good job. Like, it's okay to enjoy the fruits of your labor every now and then. And I think part of it, you probably think like this too, is you don't want to slip, right? You don't want to like do this and then this become the habit. That's my biggest fear, is like, okay, I've made this, like I bought this nice house. Well, now I'm just going to start living this lavish lifestyle. No, we're disciplined. And so don't be scared. That would be my advice to you. Don't be scared that you're going to just slip. You'll jump right back. I already told my wife.
Do you know what my moment like that was for what you're saying right now? Like, now I can get guac on my Chipotle, and I'm like, shoot, I don't want to slip, bro. Like, that guac didn't hurt me at all. Like, I can put it on there now and not care about those $2. And I'm like, Felipe, are you slipping, bro? Like, that used to be hard. Like, what's going on?
Tighten up a little bit, you know? Tighten up. Yeah, you don't want lifestyle creep. You really don't. But on the flip side,
I agree.
It's not creep if you're. It is creep compared to what you were, but you don't want to have a poor mentality. And I know people who do that.
Like, JD, I remember growing up, like, we had to decide whether we were going to get a burger or a cheeseburger at McDonald's growing up. And like, going from that to like, you know, ordering my dream car, like, to me, that feels like a lifestyle creep. But I tend not to focus on how much work I just did. Like, calluses, I'm putting my hand in the camera, they don't go away. Like, these freaking calluses from pushing a broom and working on construction sites, like, I remember the work that I've had, and I still have that work ethic. And I think that's the difference between people, like you said a minute ago, like, you don't want to go buy an $80,000 boat making $50,000 a year, right? If you're making $50,000 a year, you probably don't need to be buying a boat. You need to focus on how to make $150,000 a year before you think about buying a $10,000 boat. And like those, like that mindset shift is what's going to like most shield you from that lifestyle creep.
Yep. I think that's spot on. It's all a mindset. And, you know, if you have that discipline built into you, or you build it in over time, you're going to be fine. You're going to be fine.
JD, so thank you so much for like this. This has been an amazing interview.
Yeah, this was great.
Yeah, it has been awesome. Where can the audience learn more about you? Where can they find you?
Yep, find me on Instagram at Finance Cowboy. At Finance Cowboy. It's the best Instagram page out there, you know, if you ask me, but I'm kind of biased. No, I'm joking. But yeah, I post a lot of content. I post daily. I mix it up. You know, I do post a lot about real estate, but just wealth building in general. I do one-on-one coaching if anybody ever has questions or wants to meet with me. And I got some other things working in the background. But yeah, that's where I can be found. I love to connect with everybody on there.
That's awesome. I love following him on Instagram because I want to put him up to like, I wish he would have put like the Southern dad for real estate or something, not the cowboy, just because like I love watching him and I'm like, oh man, in my mind, he's an old soul, rich guy living it up in a tree, hunting. Like, I just think it's awesome. And I always feel, oh wait, no, he's like younger than I am. What the heck? Like,
I know, dude. I act like I'm old. I don't know why. It's kind of sad. I was playing, anyways. I'm not gonna get into that. But yeah, I'm like old. My wife makes fun of me.
Guys,
you know, and then the hairline doesn't help. You know.
Oh man, that's why you're wearing a hat.
Oh my gosh, I love this guy. Everyone, go follow JD on Instagram. Make sure you do that. JD, thank you so much for your time, brother. Honestly, it's been a pleasure to have you on. I can't wait to have you back on. I got to invite you and get you over to Rat Race to do some stuff with us as well. And as always, you know, have a great rest of your day, brother. We'll see you soon.
See you guys. Thank you.
The Rat Race to 5 podcast, where we discuss money, mindset, real estate investing, and ways to achieve financial independence. Whether you are a rookie or a veteran needing new ideas for investing or creating side hustles, you're in the right place.